the unemployment rate ticking up for a fourth straight month to 4.6%. Joining me now, Mohamed El-Erian, Allianz Chief Economic Advisor. And Mohamed, listen, I'm having a little bit of trouble with this jobs report. I don't know about you, just in terms of getting that clear picture of what is really going on.
So we should really look through this report.
Okay.
There are so many distortions, and I think Chair Powell was absolutely right when he said we shouldn't take anything out of it. But if you put a gun to my head and say, ignore all the distortions, you have to come up with a conclusion, and I say, do I really have to? And you say, yes, I will tell you it just points to a weakening labor market.
And the weakening, not just we talked to an economist earlier who said most of it has to do with the government stuff. If you take that out, it looks okay. I mean, is that, how valid do you think that assessment is?
So it is valid that a lot of it has to do with the governing government. We lost over 100,000 jobs there. However, if you look at the private sector, you see it's all about health and education. The other sectors are struggling. And if you extrapolate what's happening to the unemployment rate, you would worry. But I want to stress again, these data could be really distorted, and we have to be careful how we interpret them.
Okay, so let's leave the jobs report aside for a moment then. We get other jobs data to some extent, right? We get, various private surveys, we get the weekly jobless claims. So if we pretend this didn't happen this morning, and I said to you, what's the character of the job market right now, what would you say?
I would say weak, and most importantly, Julie, decoupling from GDP growth. So we are likely to see continued solid GDP growth and a weakening labor market. That is a relatively new phenomenon, and it's one that puts the Fed in a difficult position, especially given that the inflation rate is stuck around 3%. So we will look good in terms of GDP growth. We will look weaker in terms of the labor market, and we've got to keep an eye on whether inflation expectations remain anchored, which I think they will, but that is key.
Why is that happening? The weakening labor market paired with expanding GDP?
Part of it has to do with the role of AI. AI-related spending has become a major driver. It doesn't have the same multiplier effect through the economy as other spending does. Part of it has to do with the lower end of the household sector. The low-income consumers are having more difficulty. And I think looking forward, people are worried that as AI goes from being a demand issue to a supply issue, that decoupling may increase. It doesn't need to. I want to stress, it doesn't need to. If you talk to companies like Accenture, if you talk to a company like Walmart, they emphasize the labor enhancement side of AI. However, the tendency for a lot of companies will be the labor displacement side of AI.
Well, and how many companies, whenever you see these kinds of technological advancements, you also see them being used as an excuse or reason to slim down, even if it's not actually being replaced by that technology. How much of that is already happening, and how much of that do you think we will see, and how do you tell the difference, I guess?
It hasn't yet happened, and it's a risk. We've been in what people have called a low hire, low fire environment. If you're in a low hire, low fire environment, you think twice about getting rid of your labor force. If we suddenly see a spike in private layoffs, then other companies will use that as air cover. We haven't seen it yet. I want to stress we haven't seen it yet, but that is a risk.
Going into next year, I've heard some optimism around the sort of tax stimulus that's going to be coming into the economy, both for consumers and for companies. How much do you think that will be a tailwind for 2026?
It certainly will be. We will have loose fiscal and monetary policy. We will have continued AI spending. We will have, as a result, solid growth above 2%, which compared to Europe will look incredible. But that central scenario, as compelling as it is, I don't think commands more than a 50% probability. You have two tails that are equally fat. One is a boom, literally a non-inflationary boom, as AI impacts the supply side and productivity goes up. And the other one is a stagflation if the bond market decides to refuse to fund as easily as it's funded so far all the demands from both the public and the private sector, and if there's a policy mistake. So it's going to be an interesting year because while there is a central scenario, it doesn't command an overwhelming probability.
Okay, I want to take each of those things and dig into them a little bit. Okay, so let's take the AI-fueled productivity first. it doesn't feel like we're there yet. And so I wonder, do you think that does start to really take hold in 2026? Is it the later part of 2026? And sort of what does that look like? How do we see that unfolding?
I do see it taking hold. So right now we're obsessed with those working on AI. Gemini 3, how wonderful it is. Oh no, wait, OpenAI is going to come up with something.
Yeah.
It's all about those working on AI. We haven't focused enough on those working with AI, the adoption issue. We don't have an adoption policy. It's not hard actually to put in place an adoption policy. If you freeze those working on AI where they are, and you simply implement throughout the economy what they have achieved, you have a major productivity growth. That is only in AI. What about robotics? That is coming down the pike in an important way. So I certainly think that we will see it play out over a number of years. There is a possibility, not a probability, a possibility that it could be accelerated, but that requires corporate America to really increase the adoption rate.
Are you using it? And which model are you using? Do you have a favorite one?
So I use it all the time.
Okay.
I use Gemini. I think it's incredible what it does.
Like, what do you use it for? I'm just curious. I mean, I use it when I'm doing research for interviews, for example. I've been using Gemini also. So how do you use it?
So I use it for that.
Yeah.
I use it for checking what I write. I use it for looking at slides I use when I teach and ask a simple question, how do I make this more engaging? I use it for a whole range of things, and it has really increased my productivity. It also increases the time I spend on it because I get very intrigued by certain things. But it's incredibly powerful. I generate images, and you'll see, if you look at my weekly, you'll see the image generated. Underneath I put generated by AI.
Right.
And I simply say, when I read a long report, just to make sure I don't miss anything, I say, summarize the main points. So I use it all the time, and I find Gemini 3.0 incredibly powerful.
Yeah, like I say, I've been using that one too. So, okay, so that's the one side of it. Let's talk a little bit more about Treasury supply, the bond market, because we've already seen little glimmers of that, right? At a time when the Fed is cutting, very unusually, 10-year and 30-year yields are going up. So is that a sign of things to come next year, that we could see more of that phenomenon in the bond market, especially with more Treasury supply coming to market? So
there's tremendous supply from the public sector and from the private sector. Data centers now alone are going at a rate of 150 to 175 billion a year in terms of debt issuance. That is big. Then you have a 6% of GDP deficit. That's big for this part of the cycle. What I worry about is at some stage the bond market is going to say, you know what, we're not pricing in risk the way we should be pricing in risk. That is part of the downside scenario we talked about, is that the bond market's appetite, which has been incredibly strong, somehow becomes less so.
And where do you put that probability?
So I have, and that's not going to satisfy you, I have a 50% probability for the central scenario and about 25% for each side. Okay. And the big message of this, whether you're a policymaker, whether you are a market participant, whether you are a CEO, don't fall in love with your central scenario. Just recognize that it's a multimodal distribution, and you've got to pay attention to the tails, and you've got to ask yourself, which tail can I navigate better?
Yeah, I mean, that's a good lesson over the past few years. Don't get too wedded to that central scenario. Speaking of central scenarios and how things shift over time, we've got new betting odds on who's going to be the next Fed chair, right? That Kevin Warsh has really gained in the odds-making market here. You and I have talked before about who the next leader could be. Kevin Warsh, a good choice, better than Kevin Hassett? What do you think?
So Kevin has gone from below 10%. Today I looked on Polymarket just before I came in. He was at 47.
Warsh, that is.
Sorry,
yes.
Warsh.
Yes.
And Kevin Hassett is down to 41. So that's a complete transformation.
Yeah.
Now there's some circularity in this because it moved on President Trump's statements, and of course it then attracted people to bet. Look, I have a better view of what Kevin Warsh would do as Fed chair than I do of Kevin Hassett. Why? Because Kevin Warsh has gone beyond the interest rate issue. He has written about balance sheets. He has written about reforms to the Fed. He understands that a Fed that has got its analysis wrong, its predictions wrong, a Fed that has governance issue needs reform. So I'm comfortable with what he favors in terms of Fed reforms. And we know much more actually about what he would look like as a chair than we know what Kevin Hass is going to look like as a chair.
As an aside, how nuts is it that we're talking about the betting markets and who they think the next Fed chair is going to be? Do you think that whole phenomenon, is that useful for markets? Is it useful for society?
It's not useful for this. I mean, it's totally nuts for this.
It's fun. It's fun to talk about.
Because it's the decision of a single person. It's very different from when you're trying to predict millions of people voting. That's very, very different. But having said that, it's the delta that's interesting, because the delta has moved on comments from President Trump.
Yeah, the one person who's making that decision.
Correct.
Mohamed, thanks so much for coming in. It's good to see you.
Thanks for having me.
Appreciate it.